Hello, welcome back to WinFS Trading YouTube channel, the channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna teach you zero infinity risk reward trading strategy. Actually, if this is your first time of visiting here, try to subscribe and turn on the bell notification so you will get notified each time I upload a new content, and try to refer your network to this channel so that YouTube push us to higher level of audience. So I'm gonna read through this document, which is very important. Then I will take you to the chart so that you start, practicalizing this, because a lot of people have been wasting opportunity without making enough reward. So we are going to be minimizing risk near zero and getting the infinity reward. So here your risk reward is set to 0 is to infinity. It means that you idealistically lose nothing. Like you lose nothing. It doesn't mean in practice you will not lose some money, like you will not have a little bit drawdown. But this idea is designed in such a way that the stop loss peep is near 1 or 0. So I think reading through the document is the most important thing, right? This idea is practically eliminating us all placement, but there is a way to solve this problem. We shall use sniper entry near critical swing with 100% probability of valid signal. Hence, the entry point has highest momentum to push price in your favor. Once the market break new level in 15 minutes or 5 minutes time frame, just trade your stop loss to entry. This way you target infinity reward with zero risk, because whenever you trade your stop loss, you have no risk. But the biggest problem here is, how do we calculate the lot size to use? So that is where you need to pay attention. Total lot size is percentage total risk upon equity all over stop loss pip upon pip value. Okay, so you will know your equity, that's the amount you deposit, and your percentage total risk. You can say, okay, for any signal I'm gonna risk 10% as total risk. Okay, practical like typically I prefer 10% per signal. Okay, then we have equity, which is your deposit. Then stop loss peep. This is where you need to pay attention. Stop loss peep. The P value for indices are $1, except step index, which is $10. But for Forex, it varies. So you have to check the P value on Google. Just ask Google. Google will show you the P value for each type of asset you are trading. Lot size proposition is total lot size over number of position. Note, stop loss peep is entry price minus SL price, that is stop loss price. Here, SLP is made to approach 0. Okay, it is made to approach 0, but it can never be 0. This makes the lot size so big, most time bigger than max lot size limit of the broker. Some broker tell you that the minimum lot size is this or that, but when you run the calculation, you discover that most time the calculated lot size is far bigger than the maximum limit acceptable by the broker. Since some broker has max lot limit, use near max lots acceptable by your broker and make sure the signal drawdown is 0. So you don't want to be trading a signal that has a drawdown. No matter how small that drawdown is, immediately you place that trade, it should be in profit. So practically, this idea can be utilized on boom and crash market, basically when you are trading the direction. So you don't want to experience spike immediately you enter the market. Even if that will be spike, it should be when the market have reached certain profit level and start spiking, but those spike cannot convert the profit to loss. Okay, but boom and crash is not only area you can apply this. You can apply it in any other type of forex market. Okay, in continuation, this idea can be well applied to news trading. When there is news, there is spike in the market. So I have a video I'm going to link in the description of this one. Or even if I fail to link it, you can search the video on YouTube. I think the title of the video should be How to Forward Trade News. So in that video, you will learn how to actually place a trade with market price during news event before the news happens, and then you place the trade immediately. 1 minute to the news release, you place the trade. When you do that and you follow the instruction, you will discover that you will have infinity reward once the market go in your direction, and then your risk will be zero, because once you enter into profit, you are going to trade your stop loss. When you trade your stop loss, that is when your risk is zero. But there is still an issue here about what loss size are you going to use on a given equity. That's what I'm going to explain by the time I finish this document. Although this is applicable where market is ready to move in your favor with zero drawdown. So that drawdown should be zero once the trade is placed. Okay, the drawdown should be zero once the trade is placed. Range break index, boom and crash indices, fast moving forex asset like US30, GPB, USD, and gold USD can be traded using this idea. Okay, so this is just a kind of theory. Let's go to the chart and see how this is applicable in real life. This is crash 300. Okay, let's assume that you have been watching this chart for some time now, and you really want to get a signal that have a zero drawdown. I think one of the ways to get a signal that has a zero drawdown on a crash market is to buy that crash market, because you don't know when the spike will actually happen. So you want to buy crash market because you don't want to see a drawdown. So in how many ways can we get the signal in daily time frame? In how many ways can we get a signal in there? I think one of the ways to get a signal in daily time frame is, first of all, to confirm that in the daily time frame the market is breaking level to the upside. Then when you confirm that, you're actually looking for a bullish candle to open. You'll be monitoring the market for a bullish candle to create in the day, in the beginning of the day. So by the time the candle set in, it must have created a wick. So now when that happens, this wick become your source of stop loss peep. You are going to use it as stop loss peep. So you will be entering this market somewhere here, and you'll be risking. When we say the risk is zero, doesn't mean it is actually equal to zero. So you're actually risking this thing. You have to be strategic. Say you already know that this market is going to go up, is going to end up bullish, because the risk have to approach one as fast as possible, or zero, for this thing to work. So you are targeting this week to reach certain height, and then you have to believe that this market is not going to go down further, and then you are now risking 5 pips to target 600 pips. So that's what you mean by infinity risk reward, because if you check the risk reward, the risk reward is 1 is to 120. Okay, so another example will be, let's go to the forex market and check more examples. Pretty much we need daily time frame to get the accurate results. You want to see the direction of the market, where the market is breaking level, so we can actually see break of structure here. So what you want to do is, you are going to predict a daily candle. So you are actually going to predict this daily candle. So immediately this candle opens, once this candle open and you notice it's not forming wick, let's say you're assuming that we are when the candle open and you are waiting for it to create a wick, like to create sell and then start pushing, but it fails, it keep pushing. So we can now draw a line about some section of the candle that it has that like the section the candle create, and then we go to the 1 hour time frame and then check if there is a way to get a zero risk. So you see the line that passed through the section of the candle, you see this low point, you can put your stop loss there. Not you can, but a must, because that's the only safest place to put your stop loss, to run your stop loss peep. So this will be 11 peep and you are targeting 130 pips over 1:10 risk reward. That is infinity. Okay. So for this idea to make sense, actually, you have to create a separate trading account for this, a kind of login, separate login, to your MT5 for this, so that you are putting a fixed amount of money, you are risking a fixed amount of money, So even if you lose that money, you know that you really what you are doing, because if it went in your favor, you are getting infinity risk reward. But if you are liquidated, because it's more of liquidation, then you don't need to worry much, because you should risk the amount you can afford to lose. This loss size calculation formula, the formula for calculating the loss size, I think I will append it in the description of the video, like the document. I will add it so that you will see that when you made the stop loss peep close to zero, you have an infinity loss size, and that will be infinity risk reward. Okay, so thank you, and keep subscribing here, and more powerful content are gonna come in future. Remember, this is also a pattern based content. I'm gonna privatize it after 1 week, so you have to be a Patreon subscriber or a Patreon based subscriber for you to keep watching this content. So thank you and bye for now.